Hello and welcome to iTradeAIMS.net. This is Imi. Today in this video I'm going to share with you two things. First, as you see on the chart, how I caught the pound dollar, what is the process that I use and how you can use it as well. We have changed things around a bit. We have simplified it a little bit, so I'm changing my process. I'm going to share that process with you. In the description I will also share my day trading plan that you can see. It's a very detailed trading plan that I've made available for everyone to have a look at. So please go and have a look at it. In this first part of this video, I'm going to share my process of how I trade the Forex charts using nothing but price and AIMS box. And in the second part of the video, I'm going to go through, and that's about KC, how to actually take profits in day trading. So if you're interested in that, you can watch that part as well. And so let's begin. Let's record this idea. This is the core concept for my Forex trading. I mean, even without the trend line, the question is, and I want to ask, the first thing I want to look at is the daily chart. So we know Swizzy is in a downtrend. Now it might be coming to an end. We don't know. It's second month going on. Then let me zoom in. What I want to focus, once I know that it's downtrend, what I want to do is I want to cash its pullbacks. But instead of taking the pullbacks on the daily chart, I want to take intraday. So like so. And I'll give today's example. We have these two highs here. There's a high here, but price was above it. Go to the hourly chart. What do we see? We have a strong hit of that. So over here you thought this thing is going up, and then all of a sudden you have a fruit candle, a pin bar. You put a PO here, stop loss up there, 15, 17, let's make it 20, and it's going down. Where is your target? The target has to be either the low of the day so far, because this went up. It can be anything from these levels. So let's suppose anything like this. Let's go back. So in this congestion zone, when it comes back, we will have around 2R of original risk. We can have a target point here. If the market was moving too crazy and dollar was going down on other charts as well, we'll just let it run, go forward. Okay, let's go to euro dollar example. So on euro dollar, we don't have really anything clear. My opinion was of short, but if you look at it, this high, this low, go to the hourly, what do we see? It just keeps gyrating. It's more of a long. I was long here, it went up. I moved stop loss to break even, probably a little bit premature. I got out. And that's the situation on that. Let's go to pound dollar. Now this one was very good. Took a very good profit here. So we have three lows. This tries to break it. Go to the hourly chart. What do we see? We have kind of like a confusion thing. It's not really easy. You don't need to. So here we don't have a confirmation candle. So all I did was I just went long here, stop loss here. It went up, hit those levels, and I got out. Let me drag and drop. I can't find the other one. I got out half here and half there. But if you look at it, even just this, if you just use this target, the win rate here is high, so probability is high. So if you just take a long from here and then just, you know, because it went too fast and it is GU, it went on news. I could have used those levels, but I got this. That's fine. What else? We have the euro pound. I didn't really see anything on this, but if you look at it, it's sideways market, right? It's in a range. So there's the question. So the first question would be on the daily chart. And if you're trading across, so for example, this is a euro pound, then it's not just the candles, but let's not get into that. It's also what's the pound dollar doing and what's the euro dollar doing. So, you know, it becomes confusing. But anyway, if you ignore that, just, okay, what do you see? Do you see a series of higher highs and higher lows? Like this? No. Do you see a series of going down? No. So all I want to see is, now I know that it's in a range bound. So if it goes to the high of the range, I would like to short it. If it goes to the low of the range, I would like to go long. But then again, I'm only looking at the day's highs and lows. So if you look at this one, it's a bear candle and the low is there. So if I mark that low and go to the hourly chart, what do we see? We have a breakout situation. So here we have this strong move down and then price going up. So it created kind of a pullback situation. It wasn't clear for me. I didn't even pay attention. But then if you go to Euro Yen, now Euro Yen, what is it? Low, 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 low. It's in an uptrend. You don't have to have those lines and you don't have to have anything. You just look at price. It's in an uptrend. We have an inside candle. Usually in an uptrend, price would break below the inside candle and then starts going up. So if you look at this, last night it went down, and if you were looking at the hourly chart, by the time I looked at it around here, it had already cleared those levels. But then this happened, kind of upset me. But in an uptrend, a strong candle like this usually brings it a lot more buyers. So at the close of this, if I was paying attention, I could have gone long here, stop loss here. So that would be only 10 stop loss. And look where it is now. So 1:10. You grab those. If you don't get this, combine the two candles. This is a pin bar, a bullish pin bar with a big tail down there. So you can go long here and just let it run. And this is probably a seed as well. And that brings me to dollar yen. So if you look at dollar yen, I think there's a seed here in the morning. And I mean, that seed is just beautiful. But we saw this on the daily chart. I talked about it in Discord. Not there. So if you look at it, uptrend, big pullback, still slightly uptrend. You have higher high, or kind of the similar high. So it's kind of range. But then yesterday it was a bullish candle that closed above these highs. So I was looking for longs. And this was that final candle that just got me full on long. But I was long already before that. I didn't take the seed. I actually took this candle. So the pending order was there, stop loss down here, and it went up, and I shouldn't have exited, but I'm out. So today has been a very good day on this. But yesterday I was long on dollar CAD, and I should have put a pending order there. So let me talk about it again. If you look at these highs, so dollar CAD now is in sideways. It's actually in a trading range. If you look at that, over there, I needed to set a limit sell order somewhere down there, but obviously you can't get them all. And then you have the Australian dollar. I wasn't too sure about this, but if you look at it yesterday, because it's in a, you see it's in a sideways, so you want to sell the highs and the lows. You can buy the lows and sell the highs. In a downtrend, you only want to sell the highs. In an uptrend, you only want to sell the lows. So for example, for Euro Yen, you only want to sell these areas, buy these areas. See this level here? So this day, you have this low. On the next day, you want to buy somewhere there. When it tests it and goes up, you want to buy. So let's go back to the euro dollar example. If you look at it, on the euro dollar, the trend is up, but the candle is a very strong bear candle. So ideally, we should be looking for longs here. And I did go long at the close of this candle and up there, but then I got out break even. I should actually still be long in this. But at the same time, because it's a bear trend candle, and that's probably why it should be going down, but at the same time we have a support resistance level, so I'm kind of confused on the euro dollar. Kiwi is sideways. I actually shorted it here on that, but that's it's kind of like a tilted uptrend. If you look at it, it's a tilted uptrend. It was a good uptrend up till there, but then it turned into a trading range, and now it's kind of finding it hard to break those highs. If you look at the hourly chart, my short was from there, and I got out break even, again a mistake, but then again, you know, you have to protect your losses. So it went 32 point in my favor, brought my stop loss to break even, didn't go there, and now it's going down. I think my idea was correct, but I got out. So that's what I want to do. The reason I'm recording this video is that I want to remind myself, this is really exciting. I really like this. It's a very simple, it's an idea that makes sense, and I want to trade these. Did I mention that I missed this one? Yeah, I wasn't paying attention. So this was a great idea as well. If you look at it, high, 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 pivot zone. So this is low, 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 high, high, high. It's a great pivot zone. If you have a confirmation candle around that area, you just want to take, if I saw this, if I was paying attention, I would have sold the close and put stop loss up there about 15 points. So there you go. Okie dokie. Hello, Emma. Let's answer your question. So the question is, I mean, firstly, well done on doing what you're doing, you know, keeping a detailed record and stuff. You're definitely on your way to becoming a trader that you always wanted to be. So now you know that you want to be a scalper, and why not? It can be profitable. One thing, just the DAX on the 5-minute chart, and one can stick to it. Or, I mean, 5-minute is better. It's definitely better, especially for scalping. I mean, scalp is basically to go, if you go anywhere short here and you took anything between this move down, that's a scalp. If you go short here, you take however many points here, that's a scalp. If you go short here and you take how many? Swing, if you go short here, suppose anywhere here, and you stay through this, because this is not major, and then you get out here, that is M5 swing trading. So you can do both. So now let me bring some charts to show you where you can exit. Okay, I'm going to give you a framework. You can set up your, let me pause this. Okay, so why do I have this? Let's change this to, okay, this and that background. Let's set the background as well. If you are short here, anywhere here, and so this is sideways market, so you know, suppose your stop loss is up there. Don't think in terms of okay, from here to here, what's the distance? So we find out, okay, let's do it with this. So if you're short here and your stop loss is up there, don't necessarily need to have exact 2R with this. So anywhere around here, keep disturbing me, they. With the KC method, if your stop loss is wider, anywhere more than 1R is enough, because your average losers are going to be less than your 1R. Wider stop loss is better. So that's the and one example. For example, let me bring something else. Let me go to the 5-minute chart and find something. A good example. Okay, this one. Yeah, this is what we traded the other day. Right, so let's suppose you found yourself short somewhere here, and your stop loss initially is up there. That's your disaster kind of emergency stop loss, because if it started going really strongly up, you'll get out somewhere there. But ideally your stop loss is above those levels. It should be actually up there because that's the swing high. But anyway, let's suppose you got here and then you got evidence that this actually, you know, got hit here and then started coming down, and then you have your stop loss there. You're waiting through this entire period because it's going sideways, and as soon as it starts coming to these levels, you want to see how the market reacts to it, right? And anywhere here you can exit, or you can stay through for the 20 EMA exit. So if you use the KC, you can actually use the 20 or even the other side of the channel. So among these, you can make one choice, like when you did in the beginning, 1 hour or 2 hour kind of thing. In that case, what you would do is that suppose you went short here and your stop loss was up there, then you are monitoring the outer band. So as soon as price starts going out of the band, then you will start trailing candles. So for example, you're short here and price goes out of the band. This candle, and this is the concept that comes with the KC, is that any candle that in a bear market, when the high is lower than the band, it's completely out. This is your free bar. This is free bar. It's completely out of the ATR. You want to trail anywhere here, you can start to trail. So for example, if you started trailing, you would get out on this one. In some other cases, it continues to go. For example, here, right? It goes out of it. Now you're trailing. Now you're trailing, and you get out there, right? If you were long here and price closed outside, you have a reason to trail. You start trailing from here, so you'll be out. Let's suppose you're short from here. Is that yesterday? Yes, it's a beautiful signal. Now, the reason we want that stop loss to be up there is, it's this concept. Let's delete this. So if I overlay, this is the box overlay, just for the understanding of it, right? Let's do as a background as well. And get rid of that. So now you'll see is that if you were short here, before that, so price touches the outer region, comes back, you're short here, you shouldn't be getting out because that's premature, right? So your stop loss is up there. You're using the swing high, and you can use the box for it if you like. You can have the calendar channel and the box, or you can eye the box like I do. So somewhere here is your stop loss. This would allow you to actually stay in it, and not only just stay in it, actually add on to your position, because when this happens, now you have more reason. So sometimes what I do is that I go half risk and then another half, or I would just add on anyway for the next one. This looks like adding to your losers, but it's actually not a loser. It's actually a trade that is developing in itself. So you go further short here, and as soon as this happens, right, you don't really have a free bar in this because the high is not lower than this, but it gives you an idea that the price has stretched. So for example, if you were in good profit and you took some profit here, or you got out, that would be a great trade. There would be nothing wrong with it. Then you would be short here again. But here, when you think about it, where should be your stop loss? It should be all the way there. And if it's all the way there, then you calculate it from there, which would mean that your lot size will reduce. For example, you have ATM, you have the bar here and the stop loss up there. Your lot size will reduce quite a lot. But if your account is small, then you probably want to have your stop loss somewhere above this level. And if you have this level and this, then you can use 4 or 5 points above this level easily for your stop loss. You don't want to be stopped out by a little spike and then it goes further down. So in this case, it steadily went down. So you're just in it, watching it. Then it pulls back, creates another pullback. You probably want to add on, or you just want to bring your stop loss to break even around this point when it starts going down. And then it touches again. And after that, so you see 1, 2, 3, 4, 5, 6, 7 candles. Don't forget the 5 consecutive candles rule. We always use that in the past, and you can use it now. So for example, if you were short from there or you were short from here, and you see 1, 2, 3, 4, 5 consecutive candles, and specifically the one that touches the outer band, now you can trail stop loss. So you'll get 1 hour, 1.5 hour, 2 hour every now and then. And that's how you can manage these. For example, you went short here, and around this spot, you started watching the market. Now, if you trailed, you're out, right? This is today's London Open. Obviously, if you trailed, this will be out. Let's suppose you were short here. You went just immediately short straight away, and price started going down. Let me change the box. Around here, price is now out of the box. This candle is now free bar. This is a complete free bar. Around this, now don't trail the inside candles. I would suggest that when you have an inside candle, instead trail the high of the previous candle somewhere here. Now you have a free bar here. This is a free bar, and this is a free bar and a reversal candle. You definitely want to get out. So if you're short from here, you get out here. If I'm trading the 5-minute chart, I would always get out here. And today as well, I was short from here and here, I got out there. I mean, you can go long as well because it's stretched a lot, but that's what it is. And then you don't want to consider this as a pullback. I know you were short here. You were short here probably because of the pullback. I was considering this as some kind of a range going on, and I went short there so I scalped it a bit. But ideally, when you see that the move up is quite impulsive, then you don't want to consider it as a pullback. So around here, I was thinking maybe this is the move up, this is the push, and this is the pull. And it kind of was correct if you look at it. So then when price goes above this, these were actually little pullbacks towards this, but they are of short, they don't have too much ATR in them. So yeah, look at this. I mean, this was a pullback. It's quite sideways market at this point, but this was a pullback. And look at it, this was a pullback. So for example, if you're long from here or you're long from here, now it's going into profit territory. Anywhere here, when it goes above it, you can take your profits, and the strategy will look after you. So if you keep taking trades around the mid and you keep taking profits around there at the close of the candle or trailing, you'll have 60 to 70% win rate, and your profit factor will be 1.5. So yeah, anywhere there. So not good to set target points, but you can set target points as well around there. But the best thing is to long here, now see where it closes. If it closes outside and there's another candle that's completely out, start trailing the candles. Get as much profit as possible. I hope this helps.